to the Denver Radio Real Estate Show. I'm Cheryl Garlock with Colorado Front Range Properties. So glad you guys could join us here today. You know, this is a show all about residential real estate. So we really focus on the issues that face you when you're buying a home or selling a home or you're investing in property there. We are your go-to people. Give Chris Zadra at Homebridge Financial Services and I a phone call at 720-373-0654 and visit us on the web at denverrealty.com. You know, Chris, that's a great website where people can actually do their own home shopping and tap into the realtor's coveted MLS database in real time to search for homes.
Search for houses in your jammies.
You can search for houses in your jammies, and you'd be surprised how many people really do that in the middle of the night, and for whatever reason, that's when they do it, or whatever. That's when they have time that's open.
Exactly.
So absolutely do that. denverrealty.com. You're going to love that site if you're looking for a home. And also, there's a great tool on there if you want to get an idea as to what your market value is of your present home there. There's a little thing on there called the Market Snapshot there. Just go to that at denverrealty.com. You're going to get an instant analysis of what your home is worth right now in real time from the realtor's MLS using their sold comps. And by the way, those are the best comps you can get. Now, you know, I was also, Chris, reading an article here that was put out by the folks at Realty Times about should you rent your next home or buy your next home? And the article kind of went on about there are two sides to both coins, and to the coin, you know, and okay, I'll get that there a little bit there. But, you know, even my own situation, my daughters are actually renting right now, and because they've been caught in the whirlwind of issues in the past, you know, economic distress, but now they're coming out of it, and they recognize that this is a landlord's feast of a market right
Absolutely.
now.
Yeah.
You know, the rents are really going up there, and as we share with you guys about what properties are available in Property Showcase today, you're going to be amazed at what some of the actual monthly payments are on those properties versus what you have to pay for it in rent and get a whole lot less home.
Well, think about this, Cheryl. I mean, if you're paying $1,000 a month in rent,
yeah,
over 5 years, you know, most people that's kind of a good time frame. That's $60,000.
Absolutely,
that's a lot of money.
Yeah. Absolutely, that's a lot of money, and there's no tax advantage, there's no write-off on it, and there's no appreciation on there.
It's like flushing $1,000 down the toilet every month.
And it really is. I did just sell a home to a young couple here who actually had bought a home, only held it for about 18 months, and they made $50,000, about $50,000, I should say, on that, and they were able to use that to buy a better home and put down 20%.
Yep.
And you know, it was just a great opportunity. So, you know, Chris, let's talk to people here just a little bit about what it means to get pre-qualified, because I get these inquiries all the time from people that want to rent to own, or I'm going to rent here and do you have any houses available for rent, and the rents are sky high, and I'm going, why don't you find out if you can get pre-qualified?
You know, there's really two terms we use in our world a lot. It's pre-qualified, pre-approved, and we'll talk about both. The pre-qualification process, I always call it the 20 questions game.
Yeah.
You know, I get on the phone with the customer, I ask them, you know, where they work, you know, how long they've been there, what's their social, what's their birth date, you know, a bunch of stuff like that. Some lenders, they kind of do a very minimal portion of that, and they kind of put some math together and they say, okay, qualify for X. You know, one of the things I think is critical, and you know, part of what we've gone through as an industry with regulation, you know, it's really in our best interest, we're required to make sure that the customer really qualifies, and so we go through the process, we get their authorization on credit, we pull a credit report, you know, we understand what their income and their assets look like, and so basically pre-qualification is an initial review. Sometimes we get the documentation like pay stubs and such, but a lot of times it's more of just a phone conversation. You know, they tell us what they make, we get the credit, all that kind of stuff. We say, okay, you can qualify for X home based on, you know, what we're doing, and like I said, we go through a little bit more to make sure that we've got somebody that's not going to have credit glitches and such.
Now, I've got a comment on that, and that is that I cannot tell you how important it is when you're thinking about going ahead and looking for a home to buy. Getting pre-qualified first is an absolute must, because you know what, Chris, there is absolutely nothing worse than showing somebody a $300,000 home only to find out they qualify for $2.
Right, and you know, one of the things, and even taking that a step further, Cheryl, is getting the credit report run is an important thing too. I mean, I don't know how many times I've had a customer call me, and you know, their credit's awesome, they're bragging about their credit, and poof, up pops a medical bill. I actually just had one the other day.
Yeah.
They had no idea it was there. They thought the insurance company paid for it, and now they're, you know, running ragged trying to get things figured out. Other side of the coin is somebody that thinks they have terrible credit.
Right.
It's always good to talk with somebody, because I've had countless cases where people think their credit's not good enough, just like we were talking earlier as far as why the percentage of homeowners is down. It's because people think that their credit's not good enough, and sometimes it is not good enough, and a lot of times it's fine.
But you know what? There's a lot of times, more often than not, it's not that far away, and there are fixes that can be done, and you need to take a proactive step in being able to do that. And sometimes those corrections can happen very quickly. Very, very, very quickly there. So let's talk about the difference between, or now, what it means to be pre-approved.
So pre-approval is really kind of proving what you told me. So, and there's really a couple different ways you can get pre-approved. So after we do the pre-qual, a lot of times I'll ask the customers for kind of the basic stuff, pay stubs, W-2s, bank statements, tax returns.
So you verify some of the information for real.
So I want to make sure that, I can count their income. If they're self-employed, there's a lot of little things that they write off and such that I want to get a hold of. And from there, we can actually do one of two types of approvals. The easiest way to get an approval today is what we call an automated approval. It's done through the Fannie Mae or Freddie Mac system. We run it through a system. As long as I put the data in well, we have a solid approval. Back in the days, there were some people that kind of, junk in, junk out, and, we run into issues. Some lenders in today's world, it's not as common, and when we get busy, but you can also submit the file into an underwriter and kind of have it approved based on, needing an appraisal. But, the automated approval typically is good enough if the lender is doing what they're supposed to.
Right. But I'm glad you mentioned that there, Chris, because really and truly, I run into people all the time who will go ahead and they've stumbled on some lender of their own accord or whatever, and they just found out, oh no, I can't qualify, I can't get approved or whatever. I'm going, now really, did you talk to them about this, or that? And I'm trying to say to you, you really need to pay attention to who you're talking to, who has experience, and frankly, really cares.
Absolutely.
Because there are different ways to look at how you might structure that loan.
The hardest or the biggest thing about my side of the world is obviously we're doing mortgages, but really the key to what we do is to structure.
Absolutely.
It's to find a way that works and is not too risky for both us as the lender, but also more importantly the customer, to get them into that right loan.
That's absolutely true. And that means, too, you want to work with a loan officer such as yourself where you have great connections with underwriters, and you understand the different loan programs, the different criteria, and how those programs and your borrowers or the buyers can be massaged in to fit that acceptable program. Isn't that right?
Yep. One of my tactics for getting a loan approved or making a deal is getting down on my knees and begging. So.
I love it. Hey, we got so much more to share with you on the Denver Radio Real Estate Show, so stay tuned for more. We got Property Showcase coming up. You got questions for us? Yeah, 720-373-0654. We want to help you get your next home or sell that next property. We'll be right back with more.